Good afternoon. Good evening. My name is Caleb Roberts. More business finance major from McDonough, Georgia, and we'll be going over our what we did last week, the top trades and the top losses, and our strategy for the upcoming week. So for last week, our strategy was to increase how many shares we bought and to emphasize on finding stocks that we knew were going to probably be volatile, but definitely would lead us to more gains. A couple of the stocks that we bought Johnson & Johnson for 30,000 shares, and we also bought BP at 20,000 shares. Right now, they're up for us. Johnson & Johnson is up 1.82%, and BP is up 0.31%. A couple other stocks that we did was Intuit, and we bought 10,000 shares of them. Along with that, we also bought APTV, and we did 15,000 shares. Compared to weeks before, we definitely increased our shares on how much we purchased, and we're deciding on continuing with this strategy for weeks to come.
Okay. Good evening. My name is Drew Talley. I'm a senior business finance major with a minor in computer science from Mitchell, Maryland. And I'll be talking about our top 5 shares, or top 5 stocks in our portfolio for this week. Number 1, we have PayPal, which gained us $170,500. We had BB&T, which is second, which $159,000. Amazon with $89,430. Johnson & Johnson with $72,300. And Google with $63,800. Last week, Google was actually one of our highest also, but unfortunately, it moved down. So we're going to look into if we should sell more stocks, or hopefully it will be on the rise in the following weeks. We still believe that Google is always going to be a high competitor in our portfolio, so we'll always have some stocks of Google, but we're going to see how many shares exactly we will like. PayPal has always been our top. Since we have purchased it, has always been our top stock. And now we might discuss for next week about how we might put more money in it. And since it's always been on the game. And as my brother Caleb said, we just recently bought Johnson & Johnson. So for them to be growing so well, we are looking forward to see what they might come in the future. And we're going to be looking at the stock to make sure that it doesn't drop. And if it do, we might pull it in time. Might make market value trade stocks, or stop and order stocks buys, so that when the stock reaches a certain percentage or a certain value, we'll pull out in time to not lose as much money if the stock does decide to go down. And I'll pass it over to my brother Ian to talk about the lowest of our portfolio.
All right, smooth. So, good afternoon, good evening. This is Ian Jackson, senior finance major from Nashville, Tennessee, and I'll be covering our lowest 5 stocks for the week as the Wolves on Wall Street investment team. So, number 1, Allstate. We lost $15,000 on that particular stock, followed by IBM with losses of $16,275. And our third lowest stock was Spotify for this week, where we lost $28,100 on that one. That was followed by the Trade Desk, where our losses amounted to $38,400. And finally, our lowest stock for this particular week was GE. We lost $42,900 with that particular stock. So, with this in mind, we are, considering closing out some of our GE stocks. We're hoping for a slight bounce back over the next couple of weeks where we can make some of this money back, but we do want to go ahead and close out some of the stocks. That's the risk we take with getting into some of these trades a little bit heavier, and really implementing our aggressive approach. So we're going to keep these in mind, but all in all, we're profiting, and we're just going to try to change up a little bit so that we can make a little bit more money this following week. I'm passing off to my brother Jonathan, who will be covering special topics and some new strategy.
So as my brother said, my name is Jonathan Wade, business finance major from Brooklyn, New York, senior. Pretty much I'll be covering the new strategy initially. Being that our portfolio hasn't been doing much of a move or a decrease, I think we're gonna walk into investing in more volatile stocks. I think with us being wolves or named wolves on Wall Street, we need to be able to approach this aggressively, more aggressively, I should say. I think for some of our investments, for example, our top one being PayPal, I think we should do more of finding competitors like PayPal that's doing consistently well in the stock. I also believe that with us decreasing some of the stocks that we have, like in General Electric, us losing the most, 42,000, I think that's hurting our portfolio, which may be causing us to not move up how we would want. Yeah, anything else you guys want to add on that?
About some good stocks to invest in. We actually were looking up articles about like the best stocks that are on the rise, or we should try to invest in for the month of March, being that we're moving into a different month. So 5 stocks that we are currently looking at and might purchase, like we have already shares of, but might decide to purchase more are. One stock is NXP, the semiconductors. The Progressive Corporation is one. Shopify, International Business Machines, IBM. We already have some shares in that, but we're deciding to see if we want to purchase some more, and Applied Materials. We want to invest in the NXP Semiconductors was because it was named one of the top 10 best stocks to buy for 2019. After a failed merger, it left shares at a low level, and now they're living up to a very high expectation for thus far this year. So we're hoping that it continues to rise, and we would decide to purchase some stocks in those. Since it'll be a cheap stock, it might be a volatile stock, and it might, if it tends to be on the rise, it might make us more money, putting us in a higher position than we already are for this competition.
So what I'm learning with our portfolio, us being wolves on Wall Street, we're also playing it safe in a sense where we're 50% spectator stocks and 50% risky. I think for us to make that move and becoming top or being the winning team, we have to be a little bit more riskier on our stocks and selections. I feel like we're playing it safe, although some of the companies that we are investing in are pretty high in volatility. There's just more that we can do.
All in all, we're excited. We're confident in where we're at in terms of this competition, and we're ready to make the next move. So thank you for watching. And
you'll hear from us next week.
All right.